I guess one thing that we've talked about a little bit in the previous ones that we haven't hit on a lot is the whole recession word. We talked about it for 2 years.
This is the first time we haven't mentioned recession.
I thought we were going to make it through the whole one.
Yeah.
Sorry, I threw that out there for you guys.
We didn't make it.
Let's talk. So predictions. So I said I like to go back. Jason, I think I just checked it the other day. So sideways market, finishes positive, maybe a tech pullback. Kyle was kind of on the same camp, sideways market. I didn't really predict on the market. I just said I don't think we're going to have any rate cuts in 2024 with some stickier inflation. And Chris was just commented on that and said, yeah, hopefully not, because it signals too much damage and the market will be. That was 3 months ago, right? So looked up some numbers. Everything's up since then. Actually, tech's up. It's not up quite as much as it was in the first part of the year. But again, like I said, we do this every day. We watch the market every day. We listen to this stuff. I know most of our clients don't. I hope they don't, actually. So the fact that we're in it and listening to experts every day, and it's still very difficult to predict what's going to happen in 3 months, let alone the rest of the year, should show how difficult it is. But we like to throw them out. So anything. So we got one more roundtable, mid-November. Where are we going to be, or what's going to change from now to then? Or at least maybe even through the end of the year.
One rate hike.
Okay.
Housing market will not crash.
Yeah, I think that's a pretty safe one.
I think the inventory is so weak right now that's going to hold. It wouldn't surprise me. I mean, all this tech chasing, right? By the time everybody knows about it, by the time everybody wishes they had it, that's usually when you start to see at least a short-term top. So it wouldn't surprise me if we see a little bit of a tech correction. I called it, last quarter. We're starting to see a little bit of a softening right now, but I mean, the demand for tech is still really strong. And I think that's kind of driven too by interest rates not being at 8. I mean, they're still at 5, which is high, but there was fears that they could have gone much, much higher. But with inflation coming down, tech is still kind of held up. So the markets have been rather resilient. No matter what we throw at it, I feel like 8 months ago, we had like 15 irons in the fire and they're all awful. And the market is still holding up. There's less concern geopolitically right now. That doesn't seem to be in the news. That could easily throw a little wrench in the short term. But, in the very, very long term, it won't matter. These are just kind of fun little 90-day predictions.
I guess one thing that we've talked about a little bit in the previous ones that we haven't hit on a lot is the whole recession word. We talked about it for 2 years.
This is the first time we haven't mentioned recession.
I thought we were going to make it through the whole one. Sorry, I threw that out there for you guys.
We didn't make it.
Well, I just recall, I know that at the beginning of the year, one of my predictions was potentially kind of that sideways market first half, maybe a small short recession at some point second half of the year. Nothing to react to or avoid. Essentially, it was going to be short in duration and short in depth. I think it's kind of the topics or talking points I've used. I don't see a recession in the next 3-4 months. So I guess that was a prediction that was wrong. But it's still something to pay attention to with the amount of spending that's still going on. Eventually things are going to come to roost here. But I guess the prediction is I don't think we'll officially go into recession the next 3 or 4 months here through the end of the year. I think rates will start to pause. I think inflation is going to kind of get stuck around this 3% and 2% number. I don't think it's going to come down a whole lot. And like Chris hinted at too, it'll be interesting to watch kind of the labor market and employment numbers and see what that happens and what that looks like over the next 3 or 4 months here, especially with seasonal stuff like holidays and stuff coming up. So
I'll go with value over growth. I'll go with at least slightly lower, but maybe considerably lower 30-year mortgage rates in the next 3 months.
Interesting.
I think those two probably they actually go together. I would think, based on like I said, what Jason's saying, they may have a tech correction that's going to help value out. So,
what about housing prices? I know in the last the monthly market matters, Jason talked about housing prices are less than 1% off their highs. Is there any pullback or correction anybody seeing in that in the next 3, 4, 5 months?
That's what Jason was talking about. There's just no supply.
No supply.
Who wants to swap out their 3.5 for a 7.5?
Yep.
Well, and the second there's a rate cut, I mean, that's the thing with real estate right now. The second there's a rate cut, you've got a lot of pent up demand to move, I bet. You know,
Yeah, it'll come eventually, but there's not a lot of volunteers right now. That's for sure. I think our friends that do, or are involved in mortgage origination, they'll tell you it's not, there's not a lot of volume right now.
Yeah. Yeah. The only thing I have is that I think we always forget that rate increases are, it take a while to take effect. And so that was the steepest rate increase, I think in history, if I'm correct on that. I know it's much steeper than the previous ones we've had. And it seems to have, maybe helped out a little bit with inflation, but we see, some of the second and third order effects take a little bit longer to develop. And so I think we might have a little bit, like I said, we've talked sideways market, maybe it'll be down a little bit in the back half of the year, because I think some of those things are starting to take hold. And you're reading the headlines with, companies missing earnings and, employment and that type of stuff. Employment's still strong, but again, lagging indicator, and eventually these things, there's no free lunch, right? You eventually pay the piper for all the things you do. It was fun to print money. It was fun to, disrupt supply chains, keep people home, save everybody, which again, for better or for worse, it was a decision that was made, but there's no free lunch. So eventually that does result in inflation. We've already seen that. So now we've done this aggressive rate hiking cycle, and hey, it helps, it helps in some areas. It'll probably hurt in other areas. And we just, I think, are just starting to come into that now. So
what we're seeing also, Adam, credit cards just broke $1 trillion. And so,
Yep.
Granted, some of that is inflation, but yeah, people are starting to run out of disposable income.
Yep.
And they've maintained their lifestyle up until this point. But like you said, there's an ebb and flow market cycle. And so I don't think it would shock anybody if things over the next 6 to 9 months just slow down a little bit. Doesn't mean crash or anything like that. It just means slow. And so, life will go on, collect our dividends, collect our interest, and stay diversified, right?
Yeah, absolutely. So, hey, hope you guys have enjoyed it. As always, so reach out to us with any questions. Reach out to us personally. Hopefully we're reaching out to you personally as well. But if you have questions about the market, you can see sometimes we actually use them on the show, and other people probably have the same questions. As always, you can follow us on Facebook, on LinkedIn, YouTube channel. Our website's probably the best resource with lots of material there at strongvalley.com. And if you would share this, I always say this, but we enjoy doing this. We get a good laugh out of it. It takes a little bit of work to prepare, but it is fun to do, and share it with someone that you think might benefit, or at least can laugh at us a little bit. And, but I think it gives a good insight into what we're doing and what we do on a daily basis, and kind of how we're thinking about things, and hopefully gives you a little bit of peace of mind too. But we appreciate your time, Chris.
Jason, did we just get some new hats and shirts in? If people need something fresh for the fall, if you do
Strong Valley swag.
So listen, everybody listening. So Chris and Jason are the gear guys, and they keep us fully stocked with hats, shirts, all kinds of stuff. So when you come into the office, look to your left. We have a whole gear rack, and that's for clients. And we're happy to have you wear it and promote promote Strong Valley.
No, well, and if you don't live in town either, just email us your size. And,
absolutely.
We'll get you out some gear.
I'll throw one last little plug in too, guys. We spent some time on that income model. If there's anybody that was watching this, either existing client or, not a client, that is interested in seeing how that actually works and how it might work for them or apply to them, reach out to us. We're happy to kind of walk you through the program and actually kind of, build one out for you in conjunction with your financial plan. So,
absolutely. Well, thanks for the time, everybody. Appreciate it. We'll be back with Monthly Market Matters next week. And like I said, one more roundtable for the year and see how we finish up 23. Oh, sorry, next month, not next year. And then one more roundtable in November and finish up 23. Thanks, everybody.
Take care.
See ya.